Hello, my name is Yale Simpson. I'm chairman of Exeter. This is an end of 2010 update on where we're going with the company, and I think it should be useful in providing a bit of insight into where we're going through 2011. The cautionary statement refers to here the usual. There's certain forward-looking statements that I'm inclined to make. And also in this, the problem we have is the categorization of resources in the U.S. Our resources meet the Canadian requirements but don't fulfill the SEC requirements. There's just a different way of doing things. So for U.S. investors, please take this as an information area, but don't base an investment decision on the back of these resources. The capital structure is set out here. 86 million shares issued, 96 million shares in total with a diluted basis. Importantly, institutional shareholding is 60%. That reflects the fact that we're a higher market cap company, and with such companies and with resources, we tend to attract more and more institutional investment. The cash in the company is $90 million. In terms of burn rate, the programs ahead of us that we've budgeted for the next year, which if we look to the end of 2011, would be approximately $25 million. Just kind of a snapshot of where we are here. Market capitalization of $500 million with the $90 million in cash. You could say we have an enterprise value of about $410 million. We'll talk about the implications of that. You can see the resource. 80% of the 26.4 million ounces of gold and the 6.7 billion pounds of copper, 80% of that falls in the highest categories of resources, which is measured and indicated. I'll talk about those in a minute. When you own a share, you have an inventory of gold and copper sitting behind each share, which is 1/3 of an ounce of gold almost, and 80 pounds of copper. And so in many respects, owning a share of Exeter gives you this optionality on metal prices. We found it very cheaply. It says $2 an ounce. Certainly it was very efficient exploration we came through. The program we're doing now is pre-feasibility, which I'll talk about. It's a major study, 20,000 man-hours, as you can see. We're also drilling. The cash I mentioned before. No debt. This is part, I'm going to show this one slide and then go to a video. In the video, it'll talk about the area that we're in being the Maricunga, and that there's a whole number of mines, both mines and or advanced properties north and south of us. The nearest to us, on the north side, you can see here's Caspiche, that's our discovery. Just north of us, the distance would be in the order of 10 miles, is a mine called the Maricunga mine. It's been in operation by Kinross Gold for some years. You can see it's an 8.8 million ounce resource. You should refer to their website for that. But you can see that's the mine. And on the right-hand side, which is south of us, there's a marker there for the Cerro Casale project. That's not yet in production. It's owned by Barrick and Kinross, and I will talk about that. But you can see the 28.8 million ounce resource. So Caspiche discovery, we're going to talk a lot about here, but you can see it's not isolated. It's in a mining district. You can drive up to it on a good road, and we're going to talk about that in the video. So we'll look at the video piece to get a summary of kind of how this looks from the air and underground. We're showing here a video of Caspiche to show what the project looks like in 3 dimensions. We're starting by having a look at Chile on the west coast of South America. And to get to the property, you fly to the capital city of Santiago and then north to Copiapó, a regional mining center. The project is in the Maricunga belt. It's a very important emerging gold-copper district where the deposits are known to be large, of which 4 of those projects have been in production. Infrastructure is continuing to be built in the area, and we see on this view both road access, power line access, and concentrate pipelines, all part of what are the regional plans, not just by us, but by the likes of Barrick with their adjacent property. We're looking here at Caspiche on the right-hand side. That is the mining license. The licenses on the left, or on that side, are for infrastructure. The Caspiche Porphyry is shown here. Interestingly, it's at altitude at 4,200 meters, but it is not, it's almost flat. It is not rough at all. We originally drilled these Caspiche epithermals. The ridge you're looking at here has some gold on it. And in fact, not only us, but a previous explorer, or explorers, did work on that ridge. The Caspiche Porphyry, as you can see here, is in a relatively flat area, covered with some gravels. And we drilled, our first discovery hole was drill hole 13, which made really an impression on us as the potential scope. Then we followed up with over 100 additional holes, most of them being diamond drill holes. You can see here what the area looks like at surface. Like I said, it's relatively subdued. We recover these drill cores, the geologists examine them, and then the laboratory examines them further, or assays them further. To get a sense of scale, here's the Statue of Liberty at 46 meters high. These drill holes go down a long way, as can be seen. In exploration, we in fact found an upper zone which is gold only. In other words, there's no copper there, where we're looking at a standalone project, in other words, a pre-feasibility study to develop this deposit on its own, 1.4 million ounces. The deposit is wide, it's about 1 kilometer across, and when we drilled it, we went through this gold-only zone into the sulfide zone, as we call it. Now, what we're seeing here is the central part of it, almost 12 million ounces of gold, 21 million ounces of silver, 3.2 billion pounds of copper. That's the central zone. Surrounding that is a broader low-grade zone, and you can see here, measured and indicated, 20 million ounces. That's only the sulfide. That does not include the oxide on top. Again, large amount of copper, 5.3 billion pounds. You can see as you rotate the project that is not a uniform shape, and that's why we have over 109 drill holes into the deposit to best define it. And in fact, where we're drilling today with 2 drills to further define the central part of it. It's a large deposit. By industry standards, it's the largest discovery made of gold and copper in some years. Certainly in Chile, it's one of the largest discoveries in a decade. So as you look at this project, we rotate it around, you can see the scope of it, and the shape of it lends itself to open pit mining. In other words, mining from surface down to a depth of up to 1,000 meters. So now we're going to kind of look at the concepts for mining, and this is the subject of the pre-feasibility stage, pre-feasibility work that we're doing. The oxide pit, to take off the gold-only zone, would be mined by surface methods, and the concept is to mine very much on the basis that the mine to the north of us, operated by Kinross, is. In other words, what we call heap leaching, relatively low capital cost, just to recover the oxide zone. That looks like a very interesting project for the company. Then you'd look at progressively mining the sulfides underneath. The sulfide, of course, is the large resource that you could contemplate developing to a depth of 1 kilometer. You'd do this in stages, and you'd recover the gold from the ore, I should say, from the pit, run it by a conveyor route down to a lower altitude where the plant would be sited. The altitude of that plant would be about 3,600 meters. That is the concept for the development of the project. Now the video showed exactly what I'm showing here. This is kind of giving a little bit more time. Really, the area north of Caspiche, the major properties there are controlled by Kinross. You can see Maricunga Mine, Lobo Marte property, La Coipa, and to the south of us you can see Barrick with Kinross. You can see Nippon Mitsui have the Caserones, which is a copper project, further down Gold Corp, and then further down again Barrick. So in many respects, this very important new district is controlled by 3 majors and 1 junior, the junior being us. The interest in those companies is largely because of Chile. It's Chile, there's big deposits. Chile has a record of permitting projects, and that's why you have such a high level of interest by not only the likes of Exeter's, but the senior companies. Our discovery ranks, of course, in size, broadly speaking, with Cerro Casale next to us. I'm going to come in here and talk a bit about valuation and what have you, because I think it takes some explaining as to why we're in this pre-feasibility study, what we're going to do with the project, etc. Now, when I talk about value here, I want to kind of go through that, because when you look at the size of the discovery we have, the question always comes up, what are you going to do with it? And there's really, for junior companies, there's two ways of going forward. Well, there's three. One is you can go ahead and build it yourself, do everything yourself, and that's quite possible. Certainly if you're a company like Exeter, it's possible, because technically and the size is within the scope of a junior company. But for a company like Exeter to make this kind of a discovery, we either will partner with a major company to build it. In other words, we would take a minority position and partner, or you sell the company. And so the selling of the company side, the question would be, what value would you get for it? How important is that to you, to the company? Is that a key part of our strategy? Well, let's look at valuation. This chart really tells the story of why I own the shares in the company. It's because if you look at Caspiche, the second chart over shows Cerro Casale, Lobo Marte, El Morro. These are valuation parameters put on those projects when they were sold to the owners that are currently listed there. Now, if you look on the left-hand side, let's look at this charts, what they mean. The blue bar graph indicates the 26 million ounces in all categories defined by our drilling as of the last resource. If you consider the coppers there, the copper has significant value. And in fact, the copper would command almost 40% of the value of the project. So if I give that copper a value, I can say on a gold equivalent basis, there's this 46 million ounces of gold. And that's kind of the number to focus on here. When you look at the next one, Cerro Casale, Barrick, what Barrick might pay to buy a project doesn't mean that ours was worth exactly the same project, same value or anything. But it does give a sense of valuation on these. Now that Cerro Casale project, Barrick bought 18 million ounces of gold, and in doing so, had bought a lot of copper, so they ended up with 28 million ounces on a gold equivalent basis. So on the left, we were talking about 45, Barrick bought 28 in that case, and they paid approximately $1.3 billion to buy out the ownership to get 75% of that. If you look over at Lobo Marte, if you recall very well, I recall it, 2009, when the industry was kind of getting back on its feet over what had happened in late 2008. Anglo and Teck sold Lobo Marte project. They sold 6 million ounces. That's the blue. It doesn't have any copper, so the gold equivalent in the green bar is 6 still. And that's what it is. They bought 6 million ounces were bought and sold. And you can see in El Morro, in a much more, that's the most recent of all the transactions, Goldcorp bought 70% of that project. They bought 6 million ounces of gold. Gold equivalent, it's 18 million ounces because there's lots of copper. And the question is, what did they pay for it? Now let's look at what was paid for in each case. In that case, El Morro commanded a value of $34 per gold equivalent ounce. That's kind of unwinding the transaction and looking what they would have paid if you'd made it so simplistic. They paid $34 an ounce. When Kinross bought Lobo Marte, they paid $42 an ounce. And when Barrick, through 2 transactions, netted out at $44 an ounce to buy the ounces that they bought. When you look at our current value, and we're looking at the left-hand graph again in pink, you can see our market capitalization per gold equivalent ounce is about $12. If you look at our market capitalization purely on the basis of gold, not gold equivalent, then our value would be closer to $19 or $20 an ounce. But we've done it gold equivalent here. So why are we valued in the market at $12 a gold equivalent ounce, and the other ones are 34, 42, and 44. I can suggest that a good part of that is because those projects were much more advanced than ours. They were either at the pre-feasibility or the feasibility level, where there was enough engineering done on those projects to essentially de-risk them. So they're no longer being looked at as an exploration play. They were being looked at as a potential mining operation for the acquirer. For us to move to that level, we have to complete the pre-feasibility study that is currently in progress. We've taken a decision that we will risk our money to try to get that value between $12 a gold equivalent ounce and the $34 to $42 an ounce, which we think we're worth on a comparative basis to what those other transactions were. That is the fundamental message behind what Exeter's doing. This is, I won't go into the details here. This is talking about the oxide and the sulfide. What I'm going to talk about here is, in fact, and it showed in the video very nicely, the oxide is the upper zone where there's no copper. And you could mine that as a project, standalone, where you're simply mining an oxide deposit. And at some later time, either right away or years later, you could mine the sulfide. Now this is equivalent, if you know the mining space, this story has been told over and over in our industry. Companies would mine the upper part first, the technology is different anyway, and then you come back and mine the sulfide. So in the pre-feasibility studies we're doing two, one on the oxide and one on the sulfide. Now when we talk about the 21 million ounces that the company had, 21.3 million ounces in the measured and indicated category, that's both the oxide and sulfide combined. Now the grade of Caspiche is low, but not ultra low. What I mean by that is it's low because porphyry gold copper deposits are all low grade. They benefit economically, being that if you build them at a large enough scale, they can produce a lot of gold for a long time. And typically porphyries, well, some of the porphyries in the world have been mined for 100 years, are still in production. Some of the ones in Canada have been mined for over 40 years. And so they tend to have a very, very long mine life, and that's why they're attractive to major companies. We do have a central higher grade zone in this. I won't go into this. It's in the website. This central higher grade zone has a capacity to be developed underground, not simply by open pit. This is, again, on the website. This is basically showing the size of the deposit. Look at the scale here. Now this is a plan. In other words, it's a map, as if you're looking straight down on the project. And you can see the colors, the yellows and the reds and the purples are the higher grade zones within the project. You can see just how big it is when you put the scope on it. And if you put a super pit around this to mine the whole thing open pit, you can see that this pit would be very wide. You can see it's over 1.5 miles wide and going to 3,000 feet deep. Now, this is kind of a simulated pit. Back to the an apple scenario here. If you look at the deposit as being like an apple, if you cut it down the middle and looked at it side on, this would show the shape of the deposit as far as we know it, and these lines are the drill holes going into the deposit, some of them down to as deep as 3,500 feet, and that was shown very well in the video. So that's what we would call the super pit concept to develop the project, being one of the concepts being looked at. So this is kind of showing there is some exploration potential here, by the way. We are drilling it now with 2 rigs to further define particularly the higher grade central part of the deposit. What is important here is the schedule and kind of what we're doing with this. We are doing some drilling, and we will finish that drilling in the second quarter of 2011. Some of that drilling is exploration related because we do see some scope for additional resources. And so when we finish this earlier part of the drilling, which is relating to the pre-feasibility study, we'll then move outside. There will be another resource update in 2011. You can see it coming in Q2. You can see we are doing metallurgical work. The oxide leach test work is just finishing. And you should see results coming out on that within the next month on how successfully we're doing this oxide leach. In other words, that's part of the study to look at the surface gold-only zone as a standalone mine. The oxide pre-feasibility, what that means is it's the upper gold zone. A pre-feasibility study on that we're anticipating before the end of the second quarter in 2011. Similarly, we are working on the sulfide pilot plant work, process work that's in progress. By the end of the first quarter of next year, we should have substantially completed the work to go into that pre-feasibility study on the sulfide in addition to the oxide. So the environmental impact assessment, we are doing work on that. We are working on water, a water strategy, and we're doing baseline environmental work. Let's just talk a little bit here about water. Water is scarce all around the world because there's competing demands for water, and Chile is no different. In Chile, however, there are different water sources. There's water sources that are high in the Andes that relate to basins within the Andes. In other words, aquifers that don't find where the water doesn't get to the coast. And why we don't want to see, and why I mention this, is that it is difficult to see long-term where mining can compete with agriculture for water use. So not only Exeter, but other companies are looking at water sources that we wouldn't be competing with other users on. And as part of our strategy, we have acquired licenses, which we will initiate drilling in 2011 to begin to see would this license or the second one or the third one have the capacity to meet the needs of this project. Now there's other ways of acquiring water too. Many people own water rights privately. They don't own any mineral rights. They own water rights that they may buy and sell periodically. And there is a history of doing that in Chile. So we have a strategy. We have pretty well assessed all the water resources that are not owned by other companies. We have made application for water supplies that we could contemplate exploiting separately. And over the next 2 to 3 years, we expect to pull together that complete water strategy necessary to bring the water necessary for this project. I might say from a broad point of view, in the district there is substantial amount of water identified already by various companies that cumulatively could meet the needs of all the contemplated mines. The question is, because we were last in, Exeter at this point doesn't yet have the water, but we do have the water strategy in place. I won't go into all the details of development activities because we're now in the pre-feasibility process. The mine development options, and let me back up a bit here and explain what a pre-feasibility study is. The drilling that we do isn't sufficient to determine how you're going to mine this, how this would be mined. There are many ways of approaching something. Traditionally in the old days, mining was entirely underground. And then in more modern times, they're entirely open pit. But some mines are being mined from surface and underground as well. So we are looking at 4 mining scenarios, or I should say that we have looked at 4 for the purposes of the work that we, on the resource that we announced at the beginning of the year. So this is breaking out the oxide, what we call the super pit, how deep it might go, combining oxide development with a sulfide underground development. These are the sorts of studies that have gone to Aker Solutions, A-K-E-R, Aker Solutions, who are doing the pre-feasibility study. So this is work that was commissioned by Exeter and has largely been done already. So this is some of the, and I won't go into this because we showed it a bit on the video, that the various options. One is an oxide pit only. The second is a super pit, in other words, mine everything as one large pit, which would be the sort of thing that you would be typically seeing, particularly the likes of a Barrick, and I'm just saying Barrick would be looking at their project south of us as a super pit. You could look at this as a hybrid. You could do part of it as a pit, and then you could mine it underground. These are what I was referring to as the options to develop this project. I won't go into detail on what the specific results, but metallurgy, again, is a subject. It's a subject of how efficiently can you remove the gold, the silver, and the copper from these ores. We've done quite a lot of work on the oxide. In fact, we're well advanced on the oxide ore. That's that upper gold-only zone. The work we did in 2009 indicated very good recoveries. What you're looking at here is simply mining the top of the deposit in a 5-year project. It might be done as a quicker project, and leaching the ore the same way as is shown in this photograph. Maricunga mine with Kinross, just north of us, they are doing this kind of an oxide operation on their deposit. So we are looking, studying, as Acker Solutions are, and one of these projects is similar to this one. Now, we are doing a lot more work. We're completing that work currently. I think the actual test work should be finished very early in probably January of 2011, and you should expect news on the progress of this study. I can say that we were encouraged by the work in 2009, and we're similarly encouraged by the work we're doing that we've done this year. When you look at the sulfide deposit, what we're talking about is that part of the deposit between a depth of 150 meters deep and in the order of 1,000 meters deep. In other words, between 400 feet down and 3,500 feet down. That is the bulk of the deposit. That deposit has both copper, gold, and silver. And to recover the gold, you recover the copper. Whether you like it or not, they come out together. So what you're doing is you're trying to extract both the copper and the gold as efficiently as you can to either sell that copper gold concentrate, and I'll talk about concentrates in a minute, sell that to a smelter. It might be Korea, it might be Japan, it might be Canada, where many smelters buy these kinds of products, and they do the final refining. So in the work we've done so far, we are seeing recoveries of copper to a concentrate. In other words, you don't recover 100% of it into the concentrate. The concentrate is just a product which is much higher grade than the original ore. So we're looking here, our target is 22-25% of the copper reporting to the concentrate, and then you sell the concentrate, or you do your own treatment on the concentrate. We are achieving those levels. Broadly speaking, we feel we can deliver that from the project. That's a good result. Similarly with gold, for these kinds of projects, if you can get 60 to 70% of the gold out, you've done well. And that's just a factor of what we call the metallurgy or the mineralogy of these kinds of deposits. With optimization and feasibility studies, you can get higher recoveries, and I know the work being done on Cerro Casale south of us, I think the recoveries for copper they're modeling are 90%. I think for gold it may be as high as 70%, 70 to 75%. It's just a matter of optimizing these studies. What we have found in our ore is that there's very, very minor amounts of arsenic with the ore, very minor. But when you concentrate the ore up into this concentrate mode, you concentrate a good part of that arsenic too, to a point where there's a sufficiently high amount of arsenic in the sulfide concentrate that you wouldn't get competitive pricing to sell that product. And other companies have the same issue. They have, and I can talk about other companies in Chile, where in selling the copper or looking at selling the copper, they have found some levels of arsenic, and so they remove the arsenic, and then they sell that concentrate. There are two particular techniques that are being used by the industry to recover arsenic, eliminate the arsenic, and selling a clean product. And these are reduction roasts. It's a method being used in Chile. It's being used in Sweden, the Philippines. It's a long tried and true process of reducing the arsenic and then selling a clean product. Then you take that arsenic, by the way, you put it in a form where it's inert, and then you dispose of that arsenic separately. You can also go to a technique called pressure oxidation, where you treat that concentrate. You not only remove all of the arsenic, you remove all of the sulfur, so you are producing metal. And in many respects, we see a real advantage of this on this project of proceeding to sell copper metal and to sell gold, silver, doré. This is part of what a pre-feasibility study is about. Aker Solutions are a great company. Over 30,000 employees. They have the reputation for building these kinds of projects. There's nothing new in the technology that they're looking at. This is all pretty ordinary stuff to Aker. They have done projects in the Maricunga area where we are. The most recent two have been the Maricunga mine expansion project for Kinross just north of us, and the Caserones project. So like I said, they are doing two studies, one on the heap leach and the second one on the combined heap leach and underground resource. I've also talked about the delivery times for these studies. What is really important here is from an investor point of view, is to keep in mind kind of what space Exeter's in. We have made the biggest discovery of gold copper that's been made in Chile for some years, and in fact, it's the biggest discovery of gold copper made by the industry in a few years. I haven't really done the numbers, but I know this is known as the big discovery. The grade of deposits, you know, the amount of gold and copper in a ton of rock has been diminishing dramatically. As efficiencies improve, as the gold price goes up, the grades go down. In other words, you can mine lower and lower quantities of gold from rock. And that's that bottom chart on the left. What it's showing is that over the last 20 years, in blue, the grade of ore, now in other words, the amount of gold in a ton of rock, has moved down and down and down, and you'll see on that graph the gold price. Gold price goes up, the grades go down. And in fact, the average grade of being mined by our industry today is less than a gram of gold. Now, when we look at our project, we talk about gold equivalent, because not only would you recover the gold, you'd be recovering some of the silver, and you'd be recovering copper. So there have been significant technological improvements going forward. What's important then also to look at is the discovery costs. You know, we discovered gold at in the order of $2 an ounce, and the industry is spending $50 an ounce on a good day, and this is by an industry standard. Combine all of the billions of dollars, it's $4.5 billion or so being spent collectively in the world to find gold, it's typically costing $50 an ounce. So we're in a very unique position. We have a very big deposit. It's in a jurisdiction where most of the industry, I don't think there's anybody who doesn't want to be in Chile. It's the jurisdiction of choice for copper. They produce 27% of the world's copper. So we got a big deposit in the right place. We got metal prices going in our favor. And with Aker Solutions, we see us delivering through 2011 a pre-feasibility study that puts us up into the ranking where we can show how robust this project could be for development and for advancement for shareholders. When you look at the coverage on the company by Canaccord, Selman, you can see the names there. We are well known to these companies, analysts, as one of the few companies that has the potential to deliver 1 million ounces of gold a year for perhaps 2 decades. The scope of this project is unique in the space, and that is very, very important to keep in mind as an investor. Thank you.